Hello, this is Andrew Westhof, owner and senior loan officer of Homes Mortgage Lending, and this is your interest rate update for Thursday, December 15th, 2022. If you want to see additional interest rate updates, please subscribe to my channel. Like the video so others can find it if you find it interesting. And I also do some videos on other mortgage topics, personal finance, things like that. So we'll hope to see you on additional videos as well. If you're looking to purchase a home in the state of Michigan, I am licensed anywhere in the state, have great rates. So please feel free to reach out to me. All my contact information is in the video description. So without further ado, let's take a look at what interest rates, where interest rates are at today. So today on a 30-year fixed, purchase price $250,000 with 20% down, conventional loan assuming a 740 or above credit score on a one-unit single-family residence, primary residence with a 30-day lock period, we're at a 5.967% interest rate. And that would be a 6.128% APR here at Homes Mortgage Lending. So this is the first time in a while we've seen rates dip below 6%, so definitely great news there. A lot of the reason for the dip is good inflation numbers that came out on Tuesday, on the 13th. So those numbers came out good. We saw rates drop pretty much immediately after that. They ticked up in the morning yesterday to midday, and yesterday was when the Fed met, and they increased the Fed funds rate by 0.5%. That 0.5% increase was very much expected, so it didn't move mortgage rates one way or the other. Right after the Fed funds meeting, the Fed funds rate increase, right after their meeting, that Jerome Powell, the chair of the Fed, had a press conference, a live press conference, to talk about what their plans were for the future and what their current outlook was on the economy, things like that. That was pretty neutral, so rates actually came down after that meeting. Basically, the reason rates were going up yesterday in the morning and prior to the meeting was for investors were pricing in risk of either a higher than 0.5% increase from the Fed, which would have been very unlikely, but also for the possibility of Jerome Powell saying some things that pointed towards higher Fed increases in the future. So right now the outlook is that they're probably going to increase the Fed funds rate 0.25% at their next two meetings, and then possibly stop increasing after that, with the possibility of starting to decrease sometime around September of 2023. So that's all pretty good news, stabilization in the market, and should be good news for rates. In the next few weeks over the holidays, we shouldn't see anything crazy based on economic news, but there's going to be very little trading in the market, so very few investors actively trading mortgage-backed securities, which is what pushes mortgage rates. Because of that, every individual trade is going to hold more weight, so we'll probably see some fluctuation over the holidays, and then we'll see kind of what happens at the beginning of 2023. So let's take a look at what these numbers mean in dollars and cents. So at that 5.967% interest rate, with 20% down on $250,000 purchase, that makes the loan amount $200,000. So that makes the principal and interest payment $1,194.86. And then I put some estimates in here: $900 a year for homeowners insurance, which equates to $75 per month, and $6,000 for property taxes per year, which equates to $500 per month, to get to a total estimated payment of $1,769.86. And then with the estimates for closing costs, both in-house and for third party, mostly third party, and funds to set up the escrow account, we have a total estimated out of pocket of $62,982, so basically $63,000. So to do a little math on this for you so that you can have an idea of what this might look for your purchase price, since you're probably not buying a home for exactly $250,000. At $250,000, at a principal and interest of $1,194.86. That's on a $200,000 loan, so every $100,000 borrowed is $597.43 at that rate. And every $10,000 borrowed is $59.75 at that rate. Now, this doesn't include private mortgage insurance, so if you're putting less than 20% down, you'll have some private mortgage insurance. This is a conventional loan. If you're doing a different loan type, like an FHA, VA, USDA, or something else, it's going to differ a little bit. But this is to give you a general idea of how much it costs to borrow money in the mortgage for a home right now on a mortgage. Just to give you a general idea. So hopefully that is helpful. If you do have any questions, please put them in the video comments, and I hope to catch you on the next video. Thank you so much.